Inflation came in lower than expected, yet stocks still sold off today. The Nasdaq is the worst performing index, down about 1.5% today. Small caps are in the green, but only on a marginal basis. But you actually do have about 3% of all stocks breaking above their 50-day moving average today. So what is going on and what do you need to know? First and foremost, core PCE index month over month came in at 0.2%. The forecast was around 0.25%. Last month, you came in at 0.3%. So you actually had core PCE month over month decline more than expected. What makes today particularly interesting is the Russell 2000 was up over 1% in the first 30 minutes of trading, and then that all kind of went south. We did have Chicago PMI that came out right at about the time the market started to flip. Chicago PMI came in at 35.4. The estimate was around 41. So it came in a lot lower than expected, showing the economy's not as strong as we think. But that's not actually what caused stocks to sell off today. We'll discuss that in just a moment, but first, we did get other data as well. Personal income month over month came in at 0.3%, in line with estimates. Personal spending month over month came in at 0.2% after being revised lower from last month's 0.8% down to 0.7%. So personal spending revised lower for last month came in lower than expected for this month. The estimate was around 0.4%. So you came in half of the estimate, which is not great for the consumer and not necessarily a great sign for corporate profitability. PCE on a headline basis month over month came in at 0.3%. Forecasts were anywhere from 0.2 to 0.3%. So some would say that's a miss. Some would say that's in line with estimates. That's not what caused stocks to sell off today. Call it in line with estimates. PCE on a headline year over year came in at 2.7%. Estimates were around 2.6%, so that did come in a little bit lower than what people were expecting. The real reason stocks sold off today is actually Dell. Now, you had Salesforce earnings that came out yesterday that's still having a negative impact on the markets, but Dell was down about 22% this morning, and it's really throwing into question who's really going to benefit from AI. Dell actually reported better than expected earnings across the board, better than expected guidance besides full year profitability, but it wasn't enough to justify the kind of move that the stock has seen and the expectations that were built into that. And it's really making markets question whether SMCI, down 7%, deserves the kind of multiple and valuation it's given. AMD down 2.5%, Broadcom down 4%, even Nvidia itself down 1.75% today. Not to mention your big tech stocks that doing a lot of damage to the markets today. Meta's down about 2%, Amazon's down 3%, Google's down 1%, and you do have Apple, which is more so now starting to be seen as a little bit more of an AI trade, down about 0.5%. Microsoft is also declining about 2.2% today. On one hand, you have markets that are questioning just how wide-reaching AI is going to be and how many companies are actually going to benefit from it, and maybe there's a little bit of hype there, and maybe it's unjustified. That's kind of what happened today. The other aspect to this is when you start to throw in question the reason why stocks are nearly at all-time highs, that creates an algorithmic selling effect where when Microsoft and Meta and Google, all these other stocks sell off, it sells off other stocks as well. About 80% of trading volumes are done by algorithms. So they control what happens to the broader markets on a day-by-day basis. Now, you also have this phenomenon where big tech, the stocks that are selling off today, they've actually benefited from the Fed raising rates and keeping rates higher for longer and at these elevated levels because they've collected basically free money off of their tens of billions of dollars of cash in the bank. And the Fed raising rates has had pretty much no effect on their business at all. So as inflation came in lower than expected today and economic activity came in a little bit slower than expected, you can make the argument that that's actually bad news for big tech, and that's another reason why big tech stocks are selling off today. Nasdaq down 1.5%, S&P down about 1%. The Russell 2000 is up 0.05% today. I think this would have been a much different day if Dell wouldn't have fallen over 20% in the beginning of trading and really sent down everything. But I do think that potentially sets us up for a rally here over the next couple of weeks because yeah, the markets will get over the whole Dell situation. The markets will get over the fear around AI, and well, we'll go back to worrying about inflation. And in this case, I don't think it's any longer worrying about inflation. It's more, hey, inflation's coming down. Maybe we should buy these small cap stocks. So I think it's very well possible the next couple of weeks could be fruitful for your portfolios if you are allocated to small caps. Like Tom Lee thinks, small caps could rally 50% this year, and that's not off the table given the data that we got today. It definitely helps justify the Fed potentially cutting rates July 31st, which is what I think is going to happen. I believe the first cut's coming July 31st, and that should be great news for small caps and interest rate sensitive stocks, as long as the economy does not weaken, and that's why we start to expect rate cuts. As long as we expect cuts because inflation is falling, then you're in the clear and stocks should do very well. And again, just to show a little bit of proof to say the data today was actually very positive, you have 10-year treasury yields selling off about 5 basis points today. So again, without those bad Dell earnings, without the sell-off in big tech, it probably would have been a much better day across the board, and a lot of stocks are doing well today. Remember what we went over in the beginning of this video. You're actually getting about 3% of all stocks out there on the markets breaking above their 50-day moving average today. That doesn't happen on a weekday. CNN's Fear and Greed Index is now in fear territory with a number of 42. Yesterday, you were neutral at 45, sitting right on the borderline of fear. What's interesting though, at least at the time of recording this video, the markets are not really assigning a higher likelihood of the first cut from coming by the Fed on July 31st. Now, this may need to update a little bit. I've refreshed this a couple of times, and you still have a 14.3% chance of a cut coming July 31st. Yesterday, you were actually at 15.7%, which I know is not true because these estimates, these probabilities for different moves by the Fed really are correlated down to your treasury yields, and 10-year treasury yields falling over 4 basis points today will indeed raise the odds of a cut coming July 31st, but it doesn't look like that's represented yet in the data. Nick Timiraos said today, this report was largely anticipated 2 weeks ago and won't change much of anything for the near-term Fed outlook of wait and see. So basically, we need more data before the Fed does commit to start lowering rates, but we already knew that. The fact that inflation came in lower than expected when we already expected inflation to come in low is still great news for specifically small caps, in which I think that's the area of the markets that are really being overlooked, same as Tom Lee, and I think you do get a surprise rally following this data today. Atlanta Fed GDP now estimate is falling to the lowest now you have seen in Q2. The Atlanta Fed GDP is now expecting around 2.8% GDP for Q2. Another encouraging sign today is the VIX is down 3%. On a day where the Nasdaq is down over 1%, the VIX actually being down 3% is a great sign. That means there's more calls being bought on the markets today than puts. You can also see TLT is up 0.5%. That's good for markets. Oil is down about 1.1%. That's very good for markets and very good for inflation. You're almost seeing a break lower under the support of about $74 a barrel on USO. If you see a breakdown under that, that's going to be fantastic. The dollar is up 0.1%, not doing any favors to the markets, but I think it's probably investors least of concerns today. On a technical basis for the Russell 2000, you are under your 20-day moving average today. Preferably, you would have wanted to see a close above that, around 205.50. You're not getting that, at least at the time of recording this video. It's still possible. That would be quite the end of the day, last hour or so rally. So that's not exactly my expectation. But I do believe with this inflation report, that does set you up for potentially a run into the 210s, the 215 level, potentially even next week as investors digest all of this information. They kind of, you know, sit back and relax over the weekend, and they say the AI trade is still on. Inflation is falling, and well, that should be a very good recipe for stocks coming next week. Nonetheless, that is going to go ahead and conclude this video. Hit that like button and subscribe to the channel on your way out. Most importantly, enjoy your weekends, and I will see you in the next one.